persistent inflation is making us poorer and poorer every single month. And this is going to continue for many years to come. Inflation is going to be around for quite a while. So what do you invest in if inflation is going to be around for many years, maybe a decade? I'm going to talk about what you invest in and why I think it's going to be around for a long time. So in 1979, inflation in the United States was 11%. Paul Volker was asked to become the chair of the Fed, and he took very aggressive stances against inflation, jacked up interest rates way high, and in 4 years, from 79 to 83, was able to bring inflation from 11% down to 4%. The current Fed's target, as it's been for many years, is 2%. So how long did it take Volcker to take inflation down from 4% to 2% on a consistent basis? It took another 10 years. So it took practically 15 years for Volcker and the Fed in the early 80s to bring inflation down to the current target. So right now we're at about 6.5%, down from 9%, higher in other places around the world. How long is it going to take for our inflation to come down? It could take another decade. Why? Because of a couple of things. One, the job market is very strong. There are a lot of jobs, despite the fact that tech companies are laying off tens of thousands of people every other week. We see that as the tech bloat is starting to get eradicated. This is good for the tech industry. The broader economy, most companies, however, are doing very well. There are a lot of open jobs. Companies beat earnings. Most recently, last week, 68% of the companies beat earnings expectations. So the economy is doing very well. Secondly, people are spending money. It's not all good though, because the savings rate of the American household has gone down from an outrageous high of 20% during the COVID years, which was unsustainable. It's typically between 3 and 6%. It's plummeted now to 3% as people can no longer afford some of the things that they used to afford, because inflation is increasing the prices of everything. Food, for example, over the last year is up 10.1%. People are taking on more debt. The average credit card debt has gone from $8,500 a month to $9,300 total in just the last 18 months. So people are saving less. They're putting more on a credit card. They're taking out loans, but they're still spending the money. And who is spending most of the money besides general American households? It is Gen Z and millennials. They're the ones that continue to spend, even though we've got fears of a recession. We've got a lot of bad economic news. The economy isn't all great. Fear of war expanding from the Ukraine and Russia to other parts of the world, and that conflict expanding. We've got all these fears, but Gen Z and the millennials continue to spend, especially in luxury goods. Luxury goods have led the category of spending. So the Fed is having a tough time taming inflation for these reasons: a strong job market and American consumers continuing to spend, which keeps the job market strong and pushes up prices, which then leads to inflation. So if the Fed had it their way, everyone would stop spending and the economy would slow down and bring inflation down with it. But that's not happening. Spending is continuing, even increasing in some categories, which is making it hard for the Fed, which is why they keep raising interest rates. They've slowed it a little bit, but there's talk that they might want to increase in this next meeting instead of 25 basis points to 50 basis points, because they're having such a hard time. So if you believe historically we're going to have the same inflationary scenario in the next 10 or 15 years, what should you invest in? What does well during times of inflation? There are 4 things that generally do well during inflation. Number 1 is stocks. Historically, they're a good hedge against inflation, as the value of companies tends to rise as inflation goes up. So investing in stocks like an index fund over the long term can help you stay ahead of inflation and increase your long-term growth. It's not going to be eroded like cash and other things by investing in an index fund. Second is real estate. Real estate can also be a good hedge against inflation, as the value of the property tends to rise with inflation, but the debt stays the same. So those don't converge. One goes up, one stays the same, and as you pay it off, it goes down, and you're paying with dollars that are inflated dollars, so that debt is inflated down. So that provides some good growth potential and also potentially rental income. So real estate does well in inflation. Third is commodities. Commodities like gold, oil, agricultural products can be a good hedge against inflation, as the prices of commodities also tend to rise with inflation. So it can provide some diversification for your portfolio and help you hedge against inflation. Last is Treasury inflation protected securities, or TIPS. These are bonds that are issued by the US government that are designed to provide a hedge against inflation. And TIPS pay a fixed interest rate, but the principal value of the bond adjusts with inflation. So if you need some recurring income, some passive income, especially if you're retired, then TIPS can be a great option. A lot of retirees buy TIPS because of that inflation protection. So let's focus on a couple of things. Why real estate and stocks tend to do well during inflationary periods. So number one, real estate can appreciate. Inflation can drive up the value of the real estate, even as cost of construction materials, labor, and land tends to rise with inflation. This means that the value of real estate investments can increase along with inflation and provide you with a hedge. So as the inputs rise, like the labor and the lumber and the metal and the appliances, then the value of that property also rises because you're putting in all of that material into the house, and then that makes it more valuable. Second is rental income. Real estate can provide a steady stream of rental income, which can help a real estate investor maintain the purchasing power in a high inflationary environment. So rental income can be adjusted upward with the pace of inflation, which can help maintain the value of the inflation. So as inflation goes up, the value of the property goes up. You can also raise rents in most cases to keep pace with inflation. That can then keep the value of your real estate from being eroded by inflation. So fixed rate mortgages. If an investor has a fixed rate mortgage on a property, the mortgage payments will stay the same over time, even as the value of the property is driven up by inflation. So you can benefit from the inflation of the property while paying the same mortgage every month. And rents can go up every year, but your mortgage stays the same. And of course, real estate is a tangible asset, which means it has inherent value besides just the financial value. It can provide some protection against the erosion of purchasing power that inflation can cause. Second, let's talk a little bit about stocks. These are my two favorite categories that can help protect against long-term inflation in real estate and stocks. Inflation can increase the price of goods and services, as we've seen the last couple of years, especially recently, with the price of eggs going up 58%, food 10%, luxury goods up much more, which means potentially higher profits for the companies because they can sell those goods and services for a higher profit as the prices rise, which means, of course, then their stocks are going to continue to rise. So inflation erodes the value of a currency over time, but the company's assets, such as real estate or equipment, tends to increase. Just like we talked about a second ago with real estate, a lot of companies own real estate. McDonald's, for example, is said to be one of the largest real estate holders in the world, that it's actually a real estate company that sells hamburgers because they own all of their locations. So as the value of their property goes up, McDonald's stock tends to go up as well, all things being equal. So you can see why investing in stocks, especially an index fund that holds the broader market, can be a great investment during times of inflation and can provide a hedge against inflation. So those are some ideas of what to invest in during inflation, since inflation is going to be here for a long time. Some ideas of what you can invest in to protect yourself and grow your assets, diversify your portfolio, and make sure that portfolio doesn't get eroded by inflation.